Welcome everyone to the August 4th provider meetup. Sorry for the lack of music on the intro. Looks like our jukebox is broken, but that won't stop us from getting started. So we've got a couple topics to touch on today. A lot of them related to kind of contracting, some of the implications for providers, some of the implications on our end, and we'll dive into it. Some of them will touch on some familiar things like collateral, which probably all of you know something about. Or at the very least have heard of it, but might not have that good of a sense of what it actually means, the mechanics of it. So that's what I'm going to cover today, anyway. So let's get right into it. So obviously, SC Prime, we do use a blockchain on our base layer, and this is the chain. This is the layer that handles all of our accounting. So this is what keeps the record of all the different contracts that exist. The whole history of them, the terms, and then that's a really important part. You don't want the terms to change after you've already agreed to something. That's where all the storage proofs, in order to determine how the contract resolves, so whether it's successful or not. All of that is kept on the blockchain, and the data itself is not kept on the blockchain because that would be a silly thing to do. So on this chain, if you've poked around it before, and it's okay if you haven't, but if you have, you've probably noticed that there's a lot of stuff going on. It is pretty active. There's coins moving back and forth. There's different types of transactions, sometimes relating to the same contract, sometimes not. It can be kind of complicated. So hopefully this is going to make you a little more blockchain savvy and able to kind of interpret and understand what's actually happening at that lower level. So the real centerpiece of all of this is contracts. So contracts, the first thing that they need to do is form. So when a contract is formed, that's a commitment that is being committed to the ledger forever. That is defining terms between a renter and a provider. So this says how much storage am I looking to kind of keep? What are the prices? How long is this contract for? And what is the window for the storage proof? So the storage proof is how the provider can prove that they still have the storage. The mechanics of it aren't super duper important. You can read more into it, but it's essentially the renter just challenges a random chunk of data, and the provider just shows that, oh yeah, I have it. It's right here. And they typically have about 24 hours to do that. But all of these terms are kept in that initial contract formation. So once a contract exists, it can do three different things. They can revise, renew, or resolve. And that sounds an awful lot like reduce, reuse, recycle, but I promise it's different. So what do these three different things mean? So the first, revise. So this is when a contract already exists, and it's going to keep existing, but the terms are going to change. So this usually isn't, if you hear terms changing on a contract, that can often sound like it's maybe not a good thing. But these are usually just maybe the amount of storage that the contract is for is changing. So you actually want it to be even larger than it used to be, or maybe you've realized you're actually underutilizing your contract, so you want to make it a little bit smaller. They're usually pretty innocent. And they almost always, the provider will agree to them as long as the pricing isn't really changing or anything like that. Nothing that's like stiffing you out of some money. It's just it's usually something pretty innocent. The second thing, and after a contract revises, it usually keeps existing just with those new terms, and that there is also a record of that in the blockchain. The second thing it can do is renew. So this is a fun one, and these are pretty numerous on the blockchain. So contracts don't last forever. In fact, when they're formed, with our company anyway, with SCP Corp, we typically have about a 4-week or like 1 month contract period. So that is to say that when a contract is formed, as far as everything on the blockchain layer is concerned, that contract will only exist for about a month, nothing beyond a month. Nothing less than a month. So Obviously, your data needs don't disappear after a month. I mean, I should hope that you're expecting your Word document or whatever it is, your backup, to still be accessible after a month. So what happens is usually as you get close to the end of that period, the contract will renew. So that is that it's similar, has some similar aspects to a revise in that when it renews, some of the terms can change. So maybe the pricing will update a little bit if the value of the coin is moved. Um, Maybe the size of the storage, you might want to change that a bit. But typically, renews are just what they sound like. It's that you have the data committed for a month already, and then you're going for another month. So what's important from the storage provider side is that you can pretty much expect renews to be constantly happening, at least with our SCP Corp contracts. That is because we have very long-term needs for your space. The data that we're giving to you, we want to keep accessible indefinitely. So contracts will continue to renew. But once again, as far as the blockchain layer is concerned, at any given time, a contract only exists for at the most the next month, and then it needs to be renewed again. Now, the final thing a contract can do, and it does this sometimes as well, is resolve. So this is when the contract is not going to renew, and it doesn't have any more revisions needed. It is just finished. It resolves, hopefully successfully. So that means when the contract reaches the end of its period, the provider will submit one last storage proof. They'll get their collateral back. They'll get their rent that they won. And then the contract is considered final. So at the end of this period, the provider can delete the data, or once it's no longer being paid for and it's not tied to an active contract, that can be marked for wiping, because it doesn't make sense to hold on to data that you're not being paid for anymore. So resolutions are hopefully happy, but sometimes they won't be. So if a provider, for whatever reason, does not submit a storage proof, or if they do submit a storage proof but it's wrong, there are a bunch of different reasons that could explain why some of those things might happen. But if that is the case, then the contract still will resolve, but it will resolve in a kind of failure state or an unsuccessful state. So long term, it still looks similar. So any remaining data associated with that contract will be marked for deletion because it's not tied to an active contract anymore. The collateral will still, well, instead of going back to the provider that provided it, that collateral will be burned because they didn't fulfill the terms of the original contract, and they won't get the rent either, unfortunately. So it is our goal, as well as yours, that as many contracts will resolve successfully as possible. And for our part, we hope that as many contracts will just renew continuously forever, because it keeps the data available, which is what we want. And on your end, it's kind of like subscription revenue coming in. It's just every month you get a little paycheck from SCP Corp in the form of a transaction on the blockchain, and you're just cruising, winning life, hopefully kicking back on a beach somewhere. So those are the mechanics of contracts, some of the different things that can happen to them, some of the different forms of transactions, then kind of going one level even deeper. So if you heard at the start of this, I was kind of referring to the blockchain being used for the accounting around the transactions. It can get even a bit more complicated by involving what we call state channels. So this is getting to the actual core of how the money is moving. And this is interesting, because this is something that I don't think a lot of people realize is happening because it isn't directly abstracted on the blockchain. But all that being said, what's truly happening when you have a contract between a provider and us, for example, because we are forming contracts with you guys to store that data, is over the course of that month, money is very slowly but steadily kind of going from our end of the table to yours. So that's in line with the settings that are defined in the contract. But these happen actually off the chain and just between our renter and your provider through what is called a state channel. So this money every hour of every day is just kind of slowly moving. We're putting a little bit more money over to your end of the table, if you can kind of work with the casino analogy there. So our chips are kind of moving over to you. And then what is actually being represented on the blockchain is just kind of the large events. So what makes it onto the blockchain is when those chips start moving. So that would be the start of the contract. And when those chips are all at your end at the end of the contract. But if you kind of get really into the under the hood, what is directly happening is that those SCP coins are moving from our wallet to yours. And then what's being proven on the blockchain is just the large events that will allow you to have those coins be spendable. So at the end of the contract, when you have all those coins, you'll be able to spend them. They'll be yours. So that's what makes it onto the blockchain and into the record forever. But at any given point in time, if you were to really look under the hood and look closely, you will actually have some coins that, I suppose, in a sense, are not directly represented on the record yet. But that's just a quirk of how payment channels work and state channels. So that's kind of interesting and is involved with part of how the smart contracts work and how we were able to achieve this layer of contracting on a network like this. So we've referred to collateral a bunch of times at this point, and I alluded to it earlier, as all of you probably know something about it. Some of you might be very familiar, some of you might just kind of have heard of it but are wanting to know more. So what the purpose that collateral has on our network, so this is money that you put up when you win a contract and is considered locked for the duration of the contract. So the purpose of this is essentially so you can't just disappear with the data and have to leave the renter kind of out not only their money, but with kind of a gap in the availability that used to exist where you were. Because even if you were to give out a number of shards to a number of different providers, if enough of them disappeared, then eventually your file, you won't have enough shards to reconstruct it anymore, which is not a happy situation for anyone. So what collateral represents is just you putting a little bit of money down and saying that as long as I'm good, I will get this back. But if I disappear with the data or something happens to it and it's not available to the renter, then I am committing to not having access to this money anymore. So that's a pretty fundamental part of the network. What we ask is just that you have what's called 1x collateral, meaning that you are putting up as much money as you could potentially win from the contract. On other types of networks, particularly the one that our protocol kind of derived from, they actually ask for something like 3x collateral, which is kind of interesting and has some implications with that. So that's to say that, let's say a contract is maybe worth $10. You would have to put up something like $30 collateral just to, in their eyes, verify that you're going to be a good provider and that they can trust their data with you, because you'll be penalized pretty severely if you were to not honor that contract and agreement. So to us, that 3x is pretty excessive, and I'll kind of get into why in a moment. But first, where we'll go with it is actually determining how do you know how much collateral you need, because it kind of seems like an abstract number, and I mean the wallet itself does a lot of the hard work of determining in real time exactly how to allocate all of that. But if you're setting up for the first time and you have, let's say, 5 terabytes of space, how do I know how much collateral I need to begin? So this is a formula that has been kind of kicking around for a while, but it's got a couple weird elements to it, and I think there's still a place to explain in full all the different mechanics around it. So the first thing to know, and the first number to kind of determine, is the collateral price. So as I referred to earlier, this is considered 1x, meaning that it is the same as the price of rent. So if your rent is like $4 per terabyte a month, however many SCP that is right now, then your collateral would be the same. So I think it's something like 14 right now, maybe. So let's say 14 SCP per terabyte per month, that being the unit. Now, one of my favorite things about math and engineering, when I kind of figured it out, is that a lot of formulas are really just units. So if the unit there for that collateral price is SCP per terabyte per month, and we know that ultimately we're going to wind up with just SCPs, then we know that terabytes and months have to be involved somehow. So that brings us to our next term, which is how many TBs are we sharing? So I think we said earlier in our example, we're working with like 5 terabytes. But yeah, so let's say if we're setting up a new provider, we have 5 terabytes of space, and we're at like 14 SCP per terabyte a month. That's a pretty easy calculation there to figure out how many SCP per month we're committing to collateral. And this brings us to our third parameter in this kind of formula, which is the months part. This is probably the easiest one. This is the max duration. So what is the absolute longest, the longest contract that I'm willing to accept? For the most part, our SCP Corp is going to form 1-month contracts, so like 4 weeks. But if you really wanted to, you could set it to a little bit higher, something like maybe 2 months or 6 weeks, just to make sure that you're good and you're set and that you're not going to be turning down contracts that you would otherwise want. So at this point, we've covered our collateral price, which is something like 14 SCP per terabyte per month. We have our terabytes and we have our months. So if you were to calculate it all out, you would have a number that is just pure SCPs. So that would be, if you bear with me while I bring up a calculator. So 14 times 5 terabytes times 2 months, that's 140 SCP. And this is where we get to one of the most interesting and most probably puzzling parts of this overall calculation that's going on here. And this is the renew multiplier. So this is unfortunately an artifact of how blockchains need to work, because we exist in a system where anybody can kind of anonymously just show up and offer data. And you need to build in a ton of protections around how do I know everybody's going to behave in a way that isn't putting anybody at risk or in a position where they wind up losing. So this renew multiplier, what is happening here when a contract renews, which once again we're hoping happens most of the time. If we give you data 1 month, we still expect it to be there the next month. So all of the data that you've accumulated from us, we're hoping will still renew moving forward. So you kind of have this monthly stipend that is growing and growing. But what happens when a renew happens, or when a renew occurs, is that you need to put down your collateral for the next month before you get the collateral for the previous month back. So it has to be this way so that you're never in a position where you get your money back from the previous month and then can abscond with it before it renews, because then it isn't a renewal, that's just a resolve. So it's just for the mechanics of the blockchain, and to make sure that nobody's kind of making out or able to exploit the situation. You need to put down the next month's collateral before you get the last month's back. So that's why this renew factor is 2. So you just kind of need to double the number that we just came up with, which I think was 140. So in this situation, we're already up to, at a maximum, something like 280 SCP if you wanted to store, or if you wanted to offer 5 terabytes on the network, which, as you can see, is not an insignificant number. That's a decently high ask just to get involved with the project at a fairly low stakes amount too. 5 terabytes. I know for a fact that the average provider on the network is quite a bit larger than that. So you can see how this number can kind of balloon pretty quickly as you start working out the dynamics of, okay, well, if I have my collateral price times the shared space times the max duration and then double it in the case of a renew, then this number can wind up being pretty high. So this is why we really didn't like the fact that on those other types of networks, the collateral price was like 3x, just to really make sure that, well, in their on their network, they ask 3x just to really make sure that the providers are aligned with making sure that the contract resolves successfully and that the data is available, because there's a very harsh penalty in the case that you fail a contract. But if as we've already worked out with the numbers, if it can already kind of creep to be a pretty high number pretty fast, even at just 1x, you can imagine how at 3x, if we were to triple this number, then that would be an enormous amount of coins that you would be asked to come up with just to get involved with the project. So there are some networks that are pretty happy that it works like that, because this is unfortunately one of the types of mechanics that are pretty common in crypto, is that just to get involved with a network, even in a pretty measly capacity, you need to come up front with a huge amount of capital just to participate. So that's something that is pretty prevalent in crypto, and a lot of people that are early to projects are pretty happy to encourage. But ultimately, and kind of in line with our philosophies, and if you look at what our kind of statements in the past have been, we don't feel that that's ultimately good for the people who are coming in to participate. It doesn't need to be like that, or it doesn't need to be needlessly like more than is required to ask people to show up with huge amounts of capital just to get involved. So we're pretty comfortable with just the 1x collateral. The reason why it can't be lower than 1x is because that could create kind of new potential for exploits, where if pricing changed pretty rapidly over time, you might wind up in a situation where it makes more sense for you to actually purposely fail a contract and just try and get a new one at a different price than to honor your existing contract. But by having it be exactly 1x, then that means that you're never in a position where the reward could be higher than the penalty for kind of skipping out with that data. So that helps explain kind of some of the mechanics around collateral. How do you come up with the number? We kind of mentioned, how does the price of collateral, or how does collateral affect changes in the pricing of the coin? So all of you have probably put a little bit of thought into the rent side of this. So how do I change the price of rent in the case that the coin price is changing? So the X miners have this kind of built in. So we do ask that storage providers set their rent price to about $4 per SCP per month. X miners do this already. The licenses will be getting this shortly. But this price of rent is a way to kind of stick the income and the earnings to a real world price that we're actually going out and selling to businesses. So this is a win-win, because the businesses know that if they store a certain amount of data, that they're not going to get whacked with a huge bill out of the blue one month just because the storage price completely, or the coin price completely blew up or went down while they weren't paying attention or something. If you're working with real world businesses, you have to use reasonable terms, and it is pretty reasonable to set this a constant, like the amount of storage used, to a constant, like a price. So storage providers are asking, in terms of rent, about $4 of SCP per terabyte per month, which is pretty fair and about the best that you'll get in any storage network really in existence. and our incentives definitely bring that way higher. But without getting too off topic, in the case of a price fluctuation, so this does affect rent, but it's pretty straightforward. We already have the auto pricing. But collateral, since we kind of saw how rent price and collateral are kind of one-to-one, but because collateral has these other multipliers, like the amount of shared space that you have, the max duration, and the contract renew multiplier, then price fluctuations can, in some circumstances, if things are pretty volatile, wind up actually coming back and having some implications. So let's say the price fluctuates up pretty severely. So maybe you came onto the network like in October of 2021, for example, and you had all your settings in place, and then you're all happy. You seem to be getting some contracts. You're getting some data. And then all of a sudden it's like December 2021, January 2022, and the coin price is like an order of magnitude higher than where it was before. And this whole time you were maybe enjoying your holidays or bringing in the new year with some friends, and you weren't really paying attention, and your storage provider wasn't at the forefront of your mind. Then what could wind up happening is if you don't update your settings, then you won't get your contracts anymore because your storage price or your collateral price will not be acceptable to renters, because you'll be asking for too many coins, because maybe that amount of coins used to be only $4 a month, but maybe now if the coin price went up like 10x, then you're asking 40, and they're just no renter is going to accept that much. So suddenly your contracts could be in trouble, which isn't really good for anybody. But once again, so EXA miners have that kind of built-in storage price updating. So you should be okay in that situation, and licenses will be getting that pretty shortly. However, I will say in the case that the price goes down, this is maybe where you could run into more trouble. So if you have your prices, and let's say you have the auto pricing, then you don't really need to worry about the renter ever finding your prices unacceptable, whether the coin price goes up or down. You're covered in that situation. What can happen if the coin price were to kind of drift downward over a period of time is if you the amount of coins that you have in your wallet in order to cover the collateral. So let's say you started in December or January. The amount of coins that you started off with were enough to cover the pricing at the time. But if the coin price starts to drift kind of down over time, then the pricing would need to go up in order to reflect that. It's obviously an inverse relationship. And then suddenly, maybe that amount of coins that you started off with isn't enough anymore to cover all of your storage. So that could be an uncomfortable position as well. So collateral is kind of an important one to understand, but it isn't all doom and gloom, because kind of what I'm going to lead to next is that hopefully, even if you are bringing in a large amount of storage to the network and there is a big upfront ask for the collateral terms, is that sometimes it's okay to not have enough collateral to cover absolutely all of your storage. Now, you should definitely always have enough to cover your used storage, and that should be a lot more manageable because that's typically a lower number. But the good thing is that having that data, having used data, earns you income over time. So if you're starting off with maybe only enough collateral to cover like half of your overall capacity or like 3/4 of that capacity, the fact that you're earning income every month, and with our pretty generous incentives on that used data, ideally, by the time you're actually reaching the point where half of your capacity is used, or maybe 3/4 of your capacity is used, by the time a couple months down the road or a year down the road, by the time you're there, you will have earned enough money in the meantime, or you will have earned enough coins in the meantime to make up for the rest of it. So I remember having this conversation lots back in like December and January when people were coming onto the network for the first time, and they were coming in with sometimes like 50 or 100 terabytes. and they would run the numbers and they'd say, like, you want me to provide how much collateral? And kind of think that it was a ridiculous amount, which, yeah, to be fair to them, I mean, considering what the coin price was at the time and how we were still in the early stages of having auto pricing at that point, in order to reflect that volatility, sometimes it was a pretty big number. But I do remember telling them pretty consistently, it's okay to only cover, say, half of your overall capacity, and then your winnings over time will snowball, and you'll have enough by the time it actually matters in order to cover all of it. So that can kind of cover some different situations, like how do you bring on a ton of capacity in the short term without having to commit tons of income? Well, the answer is that, or without having to commit tons of capital, the answer is you snowball over time, and it can become a much more digestible amount. But I think you're all hopefully now experts on the meaning of collateral, how it kind of represents. But there is one last kind of dynamic or aspect of really just all contracts on the blockchain in general, that some of you are probably itching for me to get to, because you know exactly where this is going, but some of you are going to be hearing about this for the first time, and that is SC prime funds. So for those of you who've been around for a little while, you might have heard of SPFs, which stand for SC prime fund. And this is a special kind of token on our network. So SCP coins are not the only type of token on our network. There is also one other called SPFs, and they are pretty special. These ones, well, I'll start with SCPs, which hopefully all of you kind of know of. So these are the native network token. These are what our storage is kind of bought and paid for. This is what is openly tradable and available on exchanges. But the other type of token, SPFs, are special because they earn SCPs over time. And the way that they earn them is by the tax that exists on storage transactions. So these SPFs are considered securities for reasons that have been determined by, like, the SEC. But the way that they earn a tax is that all storage transactions on the network, meaning, well, when I say storage transaction, really that just means contracts and different contract-related activities. They have to pay a 10% tax that is spread equally across the SPF population. So from the storage provider's angle, you've maybe never heard of this, and that's okay, because you don't pay the SPFs. Actually, the renter pays the SPFs. So there is a 10% tax, but that tax isn't coming from your end of the network or your end of the transaction. The renter is paying for that 10% fee that is distributed to the SPFs. But one of the implications here, and the way that this kind of ties into collateral and contracting and everything, is that the collateral that the provider brings is considered part of this taxable amount. So if you are bringing 1x collateral, then the renter doesn't have to pay as much in the fee. But if you were to bring in something like a 3x collateral, which would be obviously a much larger amount, or like 10x, or like some ridiculous figure, then a renter might actually, in some cases, reject forming a contract with you, even if you are providing more collateral, which could be considered a good thing, because you might be thinking to yourself, hey, I'm willing to bet $100 that my $10 contract is going to succeed. Like, isn't that a good thing? Like, I'm putting myself in a situation where there's a very steep penalty to me misbehaving. So shouldn't that make me attractive to renters? But that $100 that you're staking or kind of putting up for collateral is subject to a tax that the renter has to pay. So a very excessive collateral can actually make you not as attractive of a provider, because the renter would have to pay more. So that once again kind of ties back to some of those other types of networks that are out there that have similar mechanics, especially the one that we derived our protocol from. They are pretty content to have that 3x collateral or even higher, because in a kind of indirect way, it winds up paying that that fund token. It winds up paying them higher dividends and a lot more income. So that's why there's also some kind of resistance on those networks to lowering the collateral expectation to a smaller amount, because they're pretty content that there's a large upfront ask in terms of coin demand, and that over long periods of time, it will also earn those taxable funds, or those, in our case, SC prime funds, in other cases, on other networks, whatever their fund equivalent is, it will earn them higher dividends. But that's not how we like to run things around here. We don't really consider ourselves crypto in that regard. We try to break the mold and be a lot more practical and kind of no nonsense, and we think it's a lot more digestible to have only the kind of the lowest minimum or the lowest required collateral ask, which is 1x, without putting anybody in a position where they could potentially be at risk or exploited, and that isn't excessively generating needless revenue for people who might have controlling stake in the network and be in a position to exploit that. So hopefully you're kind of coming out of this understanding kind of why collateral exists, why some of the different settings that it pertains to are the way that they are. Hopefully you understand why the ask is 1x instead of 3x or 10x, even if it might be advantageous for some of those early adopters and advantageous for us as the team, if we did ask you guys all for 5x or 100x collateral, because we could do that if we wanted to. We could say we're only going to form contracts if you are willing to put down 50x or something, and it would create overnight enormous demand on the exchanges for the coin, and it would make the people who own these SC prime funds very wealthy, I'm sure. But it's not the right way to do it. That puts way too much ask on the storage providers in order to be able to kind of bring enough capital, or it's just an unreasonable ask in order to just participate in the network. It's not the right way to do it, and although that might be kind of the standard or the expectation in the crypto sphere, that's not who we are, and that's not the right way to run things. So that's why those parameters are where they are. And once again, if you're wanting to be reminded at any point of what they are, just hop over to the SC Prime docs page. So that is docs.scpri.me. And from there, if you head over to the storage providers tab, right near the top, there should be a page on collateral that can refresh you on kind of what collateral is, why it exists, and the formula for calculating how much you need as well. But hopefully all of you should be covered in terms of collateral already. Examiners, I know, will come with pretty generous kind of upfront and over time rebates. So this should ideally more than cover any collateral obligations that you might find yourself in, at least for the first while, as you kind of snowball over time to build up more income as well, then you should definitely be okay. But if you're kind of interested in some of these dynamics and the mechanics of it, you can find in that docs page, be refreshed on how that's calculated and the meaning behind things. So if anything wasn't clear, or if you have more questions, I'm always available in the channels, or there will be a question period at the end of this week's session. So maybe save it for then, and I'd be happy to answer. But before we get there, we have more to discuss. And I think this will come from Ken as opposed to me. But this week, we're also going to discuss some of what's been happening around contracting, some of the data drops that some of you have noticed or seen or have heard of, We're going to discuss kind of some of the causes behind that, how we've approached that problem, and what you need to know about it.
Cool. Thanks a lot, Henry, and really good information. I think we're going to label this one at the front as being a very good collateral resource. I think this would be a very heavy call to kind of sit through, but at the same time, I think it's going to be a good call to go back and revisit over time. Collateral is a really important thing on our network, and the way collateral actually works is also really interesting. And I think most of the information that you're ever going to need was just provided to you in one kind of clear and concise space. I do want to suggest a couple of things about it really quickly. Collateral is never going to be something that is not sort of mutable with us. The ideas that we are currently using for collateral and collateralization are specifically built right now to be as fair as possible to everybody and not to be extracted to the network. They are built to essentially prevent the attack vector of you doing, miscreant things with storage and having to pay a price if you do. But that doesn't mean it's going to stay that way. We say we could do 10x right now and actually turn collateral into a DeFi kind of a proposition and make a lot of money, and then we could turn around and offer you some kind of crazy APY, and ultimately, in the end of the day, we could make this whole thing sort of a double tiered deal where we're providing storage on the one hand, but at the other end, we're also doing all kinds of crazy, interesting stuff to turn storage into money creation. And I'm surprised that you don't actually see that right now. There might be some networks out there doing it, but I'm really surprised that somebody hasn't glommed onto that yet. We haven't done it because it doesn't make any sense, as Henry said, and it doesn't further the core purpose of providing storage. That said, there is going to come a time in the future where we're going to come back to the network and we're going to say we need to upgrade the collateral understanding and we need to change the way collateral actually works a little bit. And that's going to segue into what I want to talk to you about today, the status of our contractor and the status of the network in general. Because collateral in the future will be driven by this SPF dividend. And today what happens is that we set this network up and we had a choice originally to sort of do different kinds of things. And the choice we made was to go with a central contracting strategy and let the relayer pull the weight as being the on-premise distributed renter. And what that means is that as a company, when you stand up a relayer out there in the world, you always own your data. You have possession of your data. You never turn your data over to us. It goes directly from you through encryption, through sharding up to the distributed network. And that's really powerful and really important. And it's our key piece of IP that differentiates us from everybody else. But what happens is that the contractor is where the money actually gets put into the contracts and the storage is actually paid for. And we don't let the customer do that, right? If the customer was doing that, they wouldn't need us. And then ultimately, it would be a Web3 play. It would be the whole, end game of what crypto's about. Self-service, everybody just does their own thing and downloads the software, pays for the stuff, and it goes forward. We have said forever that we don't think that crypto is ready for that. So what ends up happening is in our deal, we think customers are going to want to pay in fiat. We think they're going to want SLAs. We think they're going to want handholding. We think they're going to want a whole bunch of traditionalism baked into this, storage network. And so what'll end up happening is they use us. We then go ahead and contract with the network. We handle all the crypto. We do all the stuff related to the smart contracts with the central contractor. And ultimately, it works. It's a way to essentially say real world demand can get satisfied in a crypto, driven environment. Over time, though, we do believe in Web3. And we do believe that we are headed towards that world where people will want to have that ability to purchase and use the crypto themselves. And when they do that, and they ultimately disintermediate our contractor, and we stand up contractors on every single relayer, we still have to get paid for our development. We still want to get paid for our marketing and sales and going out and bringing the customers aboard and so forth. And instead of getting paid by taking a cut off the top line, the top of the funnel, what ends up happening in that world is we get paid through those SPFs. And right now we're pulling 10% off of each contract, just, for, the development and so forth. It's not an awful lot of money at this point because it's tied directly to the storage that's on the network, and there isn't a lot there yet. But in the future, when we switch over to doing all of our revenue stream coming through the SPFs, we'll have to ultimately change those numbers around. And so we'll come back to the community and we'll say, well, look, this is what we think is a fair deal. And the community will end up making a decision whether they agree with it. And if they agree with it, then we'll move forward and the numbers will change. And we will ultimately stop being the central contractor, or we will not be the central contractor for the majority of the customers that are out there. I put the number on that to be about 3 or 4 years from now, but who knows? It could happen a lot quicker. It could happen a lot shorter period of time. So it's not a constant thing. It's not enough to say, well, it's 1x and that's where it's supposed to be and it'll always be there and blah, blah, blah. It may not. It may turn out that we change the numbers around to say, well, 3x is the number and we leave the dividend at 10%, or we say 1x is the number, but we change the dividend to a different number. So just be aware that in the future, we're going to come back with a different ask depending on how crypto progresses. Today, most people think crypto is a scam, so I don't think really we have to worry about it changing too soon. People are going to pay using credit cards and purchase orders and stuff like that. And as long as that's the case, central contracting is the right answer. All right, so let's talk a little bit about the status of the network and what's going on with the contractor. The reason why we decided to do collateral as a big headline today is because we identified over the last several months that there's some challenges on the network, and the challenges needed to be met. And ultimately, one of those big challenges was collateralization. And what ended up happening as we started to get into this research to understanding what was going on with the network is we concluded that there was problems on our side, there were problems on your side. And the problem on your side for some providers was collateralization. If you did not have enough collateral in there to cover the 2x multiplier at the end, what would end up happening is you would get 600 gigabytes and maybe you had enough collateralization in there to cover your 600, but then we were pouring in a lot more data and you were going to 700, and maybe you had enough in there to cover 500. And then what ended up happening is we got to the renewal period of the contract, and you're sitting there thinking, well, I got enough collateral in there to cover 600-700 gigs, no problem. I'm in good shape. In fact, I pulled out some coins to sell because I needed to buy some Big Macs, but I should be in good shape. But then the coin price went down. And now all of a sudden you don't have enough collateral in there to cover additional gigabytes coming up to your unit. And you didn't cover the 2x multiplier because you didn't realize that the contracts don't roll over, that they actually overlap. And there's one contract, and then you move over to the second track, and there's two contracts. That's the one you're on next. And then it does it again. It keeps hopscotching. So you need to keep having 2x collateral available in your wallet. You need to have some extra coins in your wallet. Then you can go ahead and take on more, especially as coin price is dropping. Well, a lot of you didn't, or some of you didn't. And what ends up happening is the contract renewal comes up. You don't have enough in there to cover that second one. And guess what? We don't renew the contract with you. And what happens? Your storage dumps. You lose your storage. And this happened to a number of people. And they were like scratching their heads and going, hey, what's going on here? And, what can we say? We told you needed to have this much collateral, and you thought you did, but you weren't paying attention to the macro, the coin price dropping. You weren't paying attention to whatever. You were pulling coins out to sell on the exchange. I don't know. But at the end of the day, a number of people lost data, and we're sorry, but that's how it works. So you need to keep enough collateral in there to cover any eventuality. If the coin price drops now from 1,100 or 1,200 sats right now, and the Bitcoin price down to like 200 sats, and look, if you think that's impossible, you better start thinking again, because the people that are involved in owning a lot of coins in this project are fickle. Sometimes there are people that will be really, really supportive and they'll go out and buy a whole bunch of coins, but people might have an interaction with me and just decide, hey, you know what? I hate this fucking guy and I hate this project. I'm going to go wreck him by selling all my coins. I don't know what causes people to buy and sell coins, to be frank. I know that it's a really interesting and weird dynamic that goes on. And whenever you think coin price can't go lower, you better be prepared. And whenever you think it can't go higher, you better be prepared. We all want it to go up. If it goes up, we all stand in great shape, right? We don't have to put more coins in for collateral. We don't have to do all that stuff. But when coin price goes down, it starts to test the equations that you built for yourself. Personally, if it's me and I'm standing up a provider, I'm going to load that sucker up right now while the coin prices are low because I'm banking on coin prices being higher a year from now. I have said that over and over and over again. That's just me personally, though. I'm not telling you what's going to happen. And if you go out and make decisions based on that and the coin price goes down, you better not come and sit at my house because I'm telling you, coin price can always go down. But at the same time, I think that it's going to go up personally. So if I was standing up a provider, I put a ton of collateral on that thing today. And then when the coin price goes up and I don't need quite as much collateral on there, I can always take some off and feel comfortable about it. I don't want to be in the other situation. I just don't want to lose data because I didn't pay attention to coin pricing and understanding what's going on. Yes, auto pricing will be implemented for licensed providers and we will get that done. But for now, you have to kind of take responsibility. All right. So the rest of the call is going to be about the other things that happened that caused data dumps and so forth. And I think what happened with us is we got really weirded out because, out of the blue, we just had a bunch of people report data loss. And it was like, wow, crazy. Data loss is really bad. What I want to say first about data loss is when we're talking about data loss, right? Let's be clear. We didn't lose any customer data, right? And we are the customer right now. Let's be fair. The testing data is us. We didn't lose any data. All our data is protected, right? Because the ratios that we use for erasure coding are set up so that we don't lose data, right? We can lose a bunch of providers, can lose data, and we still our data is sound. We can recover it, we can download it, we can do whatever we need to do with it. That's the beauty of our network. That's the strength. That's what we've represented to everybody from the beginning. But at the end of the day, a bunch of providers lost data, and that's bad for you, right? Obviously, if you were in that process, you lost data. And of course, we did turn it into a fairly major event internally. I mean, if you don't believe that, ask a developer exactly how I positioned it to them, and they will tell you pretty fucking serious. Right? So, and it's critically serious. And because we don't want you losing money, we want you earning money. And so, at the end of the day, for the last 2 weeks, we've been in a death march essentially to understand completely what's going on with data losses. Well, the first one was an unforced error. It's one we did ourselves. We just rolled out a change internally. We didn't have enough review on it. We didn't have enough sort of discussion about it. It just got put out there, and a bunch of you ended up seeing testing data lost, and you lost revenues because of it. And we talked about it. We apologized for it. We removed that feature. We went back to the drawing board to say, look, we need some more homework before we implement that. Internally, we chastised a little bit. We understood what the deal was. There was no commitment on that testing data to you. It's not like you were guaranteed that money or anything. When the contracts ultimately went out there and there was this bug and the testing data that we had put up on the network went out there, and some of you lost some data on your providers. At the end of the day, it was unfortunate. And what we did was we put extra money into all of the last couple of months of incentives and so forth in order to sort of help with that thing. But under no circumstances, was there any sort of commitment there or any sort of legal agreement or anything like that. It's testing data. It's going to go up. It's going to go down. But still, we don't like to see it. So ultimately, we pulled that thing down. Well, we thought that was it. We thought that was 100% of it. And, okay, stupid bonehead play on our part. We won't do it again and blah, blah, blah. But then new ones kept, stepping up and saying, hey, we lost data too. Well, as we dug into it, we found out there were about 5 or 6 reasons why this happened. And we're still in this process, by the way, of investigating this. But we think we have it kind of nailed down to understanding it so that we're not going to see a lot more of the data loss going on in the network. The second one, the biggest one, was this collateral issue that happens. And so we noticed a bunch of people with that. So the idea of having a show, talking about it here, that was a really important thing for us to do for the network. Then there were a bunch of really weird little things that we found that were sort of, interesting and things that we could change internally. One was we just didn't have settings sort of correct on our big general contractor. And guess what? It's kind of in line with how you need to keep enough collateral on your units. We needed to keep enough allowance on our unit, on our side of the equation. We had it set up for like 20 SCP or something like that per contract. And really, ultimately, we needed to keep a lot more allowance in there. So we doubled that number. And then we put a bunch more budget into our contractor so that when certain things occur and ultimately we had to have enough money to fund the kinds of uploads that we're doing right now and the kinds of data that we're dumping into the network to feed you guys and to keep the testing running and so forth. So that was one. And essentially what it did was it returned an error that said that contracts were too expensive. And so ultimately we solved that. That probably hit, double digits in terms of providers and caused some of the data loss, because what it ultimately would lead to, and what all of these things that I'm going to talk about now would lead to, is we would not renew a contract with you. And if we don't renew the contract with you, then ultimately you lose the data, right? The data goes away, and because the contract's not been renewed, and you don't get the next, wave of payment. So that was one. We have another one that ultimately was just a configuration issue on the front end. It had to do with a number of providers that needed to be in the major contracting set before the relayer stopped actually using the providers. We fixed that one. And then we have another one where there's a bad revision, a contract revision. Contracts actually have a revision number applied to them. And we were seeing cases where our revision number didn't match the one on the providers. We're still investigating that one. That one doesn't affect that many people. So all in all, we feel pretty good that the data loss issues are pretty well resolved at this point. Again, we could have launched sales to customers and been pretty comfortable with it, because the erasure coding didn't cause us to lose any data. It caused you guys to lose a little bit of data. But ultimately, at the end of the day, the data was still recoverable and usable, and we could have gone forward. I just decided not to move forward because I didn't like this idea of these data drops that were happening. So we think we've got them all. I'm not saying that somebody's not going to show up tomorrow and say, hey, I lost data, and we look at it. Was it collateral? No, what's going on? Maybe it's this bad revision thing. Maybe there's one or two things out there, but we think that it's primarily solved now, and we're ready to go ahead and start pulling the trigger on sales and really start onboarding real customer work onto the network. When our lead developer returns on Monday, he's going to go ahead and review everything that we went through over the last 2 weeks. And ultimately, we will put a pin in this whole issue and really kind of begin to proceed forward. So if you're wondering what was going on in terms of us getting out there and offering to customers and so forth, this was the holdup. In my view, this was the last holdup. And ultimately now we're going to be proceeding forward to put storage onto the network from real customers. That's proving to be a challenge too, by the way, because at the end of the day, as all of you know, the funding for this project is bootstrapped. I mean, we're really grinding it out, getting funding wherever we can, hat in hand primarily, just to get enough funding to keep the developers in the seats doing the work that they need to be doing and getting us going forward. Now you could say, well, why don't you just go out and get money from somebody who wants to invest in this thing? I mean, grinding it out with these sort of low dollar angel investors seems like not really a great strategy. Just go out to a VC. Well, as I've told you, I've talked to a couple of VCs. Well, let's call them VCs. I'm not really sure that they deserve that sort of full-fledged moniker, but in the cases of the ones I've talked to, they've come back. They said, well, we really need to dig into your financials and figure out what's going on and so forth. But right now, we don't agree with your valuation, and we think you're worth a lot less than you think. And I'm like, So you want to be a low dollar angel? I don't need that right now. I could go get that from people I already know. And if I want another $50,000 or I want another $100,000, I can go get that easy. I can spin that easy if I want to give away more assets and equity and do whatever. And I'm just not willing to do that. What's going to happen now is we are going to spend the next 2 quarters grinding out bringing storage onto the network. And it's going to be painful and slow. I know there are people that think that there's going to be something, let's call it a monsoon. It's not going to work that way. I don't care what people think. It's not going to be like that. It's not going to be like people are just going to wake up and discover us and we're going to get all this storage piling onto the network. It's not going to be that. It's going to be a long, grindy sales process. People are going to have to talk to me for about, the next 3 months because I'm going to have to put on that hat where I go out and I close a deal, right? And we bring people on one by one because people get involved in this. They look at it and they say, all right, well, I'll bring my engineers in. Let's see. What my engineers looked at? They say they found a link on your website that doesn't go anywhere. So they don't think you're real. They think you're bullshit. And, I'm like, okay, man. But look, have them sit down and let's talk about how the thing actually works. Let's get them to spin up a relayer and do a VM and try and onboard, some significant data. I'll pay for it. I'll cover the cost of it. And we can get them on board and we can get somebody to teach them, guide them on the relayer settings. It's really easy, but we'll help and we'll get you stood up. And that's where we're at right now. And what it's going to take is it's going to take a couple of months of that. And as I start to get a few people to agree and come aboard at cheap, subsidized prices, we will start to see that storage line continue to go up and begin to tip, even more and more vertical until we get a little bit of a tipping point. Now, will there be sort of like, bumps where we get like some, customer shows up out of the blue and says, look, I got 30 petabytes to onboard. Let's get going on this thing. Maybe, I think so. But look, in the long term, that whole thing is going to always result in a long, smooth growth for you. Because if somebody shows up with 30 petabytes in a certain region, we help them set up the right erasure coding settings. What's going to happen is that we are going to get more providers showing up to absorb that storage, right? It's not like we can hold the network at 4,000 or 3,000 or 2,000 providers. What's going to happen is people are going to see that storage number going to go up. They're going to hear the next month's incentives are like double what they were last month. The guy on YouTube is going to put out a new video saying, hey, things are going nuts over here on SC Prime. And people are going to come piling in again and buying Exa miners and loading up the network. So they are going to take storage out of your mouths and put it into their mouths, right? And there will be something called continuous time in service incentive multiplier. We've talked about this at length. This is how you get favored over the new guys when they do show up. But at the same time, we still got to feed the new guys because the network's going to continue to grow. So that's how this thing's going to sort of like leapfrog up the scale. And by the time you look back after 2 or 3 years, you're going to look at it and you're going to realize what I described as a compound interest strategy is ultimately going to be what you saw, not a monsoon where all of a sudden 3 terabytes showed up on your unit and now you were styling and then you could put on 10 terabytes and blah, blah. It's not going to look like that. It's going to be a slow ramping growth. Yes, it will tip up. Yes, it will start to exponentialize. But as it exponentializes, so will the number of providers on the network. So any individual provider should look at it and say, well, okay, so I can expect to have a good, solid, steady growth towards the end of 2, 3, 4, 5 years. And ultimately, I'll be making a ton of money once we get to the end of that. And the answer to that is a complete resounding yes. And we will do certain things to limit the number of providers. Because if you are following along with what I'm saying, what might be going through your mind right now is, hey, haven't I seen this on Helium before? Isn't this what happened with those guys? Well, think about Helium, right? Helium went from like 4,000 providers to 1 million providers over the span of what, about 12 to 14 months. I mean, it was insane how fast their network grew. It was insane how fast that the map just really fleshed out. We could do that, by the way.
right? We could up our incentives like nuts. We could go crazy. We could incentivize unused capacity. We could be doing all sorts of stuff to really encourage people to come aboard. And what does that actually look like? Well, we would sell a shitload of examiners. I'm not going to, hide the fact right now that examiner sales are not the same as they were in December, right? In December, people couldn't, they tripped over each other trying to buy examiners because they thought they were going to return, monsoon level dollars within months. And then people really started to understand, okay, this is a good long-term investment. This is a long-term passive income strategy. And by the time 5 years rolls by, this examiner is going to pay for itself 5 or 6 times over. And that's the real understanding. What did I do in December? I stopped the ordering at 1,000 units. I had demand easily for 3, 4, 5,000 examiners. We could have ridden that wave so hard. We could have pulled in all that money. We could have turned it into leverage shorts over on Binance. And we could have then actually made another 100x or whatever on top of whatever nonsense we wanted to pull. Because I'm a reasonable trader, by the way. And if I wanted to have done that, I could have done that. And then right now, instead of having a conversation about the status of the network, I'd be calling you right now from my boat doing that thing, right? But I'm not doing that thing because that isn't how we operate. We limited it to 1,000 because we wanted to keep the network at the right size. And ultimately, a lot of the DIYers that were out there doing like $6 provider instances, we actually limited Pi instances to kind of try and collapse the network or at least hold it at the line at where it was. Well, we're now ready to start expanding again. But expansion will be the same way. When the numbers start tipping up and people start getting excited again, and when things start really rolling, we are not going to allow it to go exponentially crazy. And we know we have other partners now that are going to be manufacturing units as well. So we're going to work with them to hold the line. We want them to be profitable and make a lot of money, but at the same time, we don't want to see the network go to 0 to 1,000,000 units where everybody's fighting over scraps of data because the salespeople are not yet bringing it in at monsoon levels. So that's how we're going to succeed at this thing. Everything is going to continue to be run on a measured pace. We're going to look at places where things are getting overheated or things are having challenges or we're running into various kinds of scenarios where like, coin price is doing something crazy, and we will mitigate. I got to tell you, when the coin price went up, if there was a mistake I made, it was not talking to some of our investors and saying, look, you guys should sell into that $3 coin price right now to hold the line on it. I didn't say that. I said the price was too high. And it was. It was clearly too high. It was a dodge candle. And it was one person, by the way, that took the coin price that high. The coin price is too low now because that person took it too high, right? I hate to kind of say this, but you can look at the mechanics on the blockchain and see exactly what happened. The coin price was just kind of moving up in lockstep with our development efforts and the network scaling and everything that was going on. But then some guy showed up and ran $750,000 into the coin and took it way up, way beyond where it really had any sense of going based on our progress. And when he got it up there, he didn't have the ability to hold it up there. And so then, of course, it did the dodge thing and came right back down. But worse, once it started dropping like that, even he lost interest and sold out at a huge, huge loss. And a bunch of other people just started selling the coin, and we got down lower than we were before. And ultimately, that's going to happen if you let the things kind of get out of control and so forth. Not saying I'm trying to control coin price, by the way, because if I wanted to, I could have stopped that coin appreciation myself. I could have went in there and sold host incentives to bring the coin price right down. I could have financed the next year of development for us on it, and I could have made everybody's life a little bit more troubling. But I probably would have made my own life challenging because the SEC would have come knocking saying, hey, what the fuck are you doing over there? And that's just not how we operate. At the end of the day, the corporation buys coins. We're not out there trying to manipulate coin price. I definitely think the coin price should go higher. It would help us if it did. But at the end of the day, all we can do is go out and buy coins that we put into contracts. And ultimately, we just don't have the power to raise the price of the coin ourselves. It's going to happen when the network really gets built out and fleshed out and storage shows up on the network. It's hard being us. It just is hard being us. Doing things the right way and doing them the way that the law has sort of laid them out is hard. And it's going to be slow, grindy, paced work. But I guarantee you, if you stick this thing out through the end, you're going to end up being proud and happy that you did. I just know that that's going to be the case. There's no proof of that. I can't guarantee it, but I could tell you, because of the way everybody's approaching this thing now and the way everybody understands it, that's where we're going. And that's where we are right now. We are ready to start selling storage on the network. We're ready to start bringing storage into your units, and we're ready to keep the lid on it so that you don't end up having to share that revenue yet with too many more providers, but you will start seeing some things where new providers show up on the network. And if we do land a 30 petabyte deal, you will start seeing more providers come in to share in that glory with you. Just the way it's going to work. Anyway, that's where we are. Everything's looking pretty good right now. One of the things I will say is we did have a thing at the beginning of our summer or spring or whenever it was that it happened after our April trade show event, where we onboarded a C-suite type individual to come in and help us with engineering. That was Bob Lewandowski, and he's done a really good job. But he told me in the beginning, he said, "Look, I really want to do this, and I'm all in. But I have to make you aware that I've got some family time that I had set aside, a couple of weeks of vacation." He took advantage of the whole inflation situation where traveling to Europe is really cheap for Americans right now, and that was already all planned out, and he had those 4 weeks. He went over there and sent us back a lot of really interesting photos, I think. But at the end of the day, that's over now. He's back in the chair. He's getting started on really setting up and building out a lot of processes and development. We're really changing who we are internally. We went from being sort of this startup oriented organization where a bunch of people just kind of had inklings of how things ought to be done, to where we're really now starting to implement a lot of agile type development strategies and so forth. And we're really growing out the organization internally to deliver that quality. I'm so excited about where this thing's going and where we're going to be. It's really a tough place right now because I know we're all really anxious to get to the next place and so forth. But I got to tell you, folks, if you've had any concerns about what we're doing, if you've had any qualms that this thing isn't on track or whatever, just understand, as an organization, every single time something's come up to task us, we've addressed it in spades. We've done an amazing job in solving it. The developers that are behind this thing are awesome, and they are pounding it. They are hitting it out of the park in every circumstance and situation. And I got to tell you, if the stuff had happened to us last year, we know now we were not ready for it. But I have to say, I think we are ready for it now. I think our internal structures are ready. Grafana was another one. We keep running into things with Grafana, and everybody, it's become a running joke with us. But remember, Grafana is a representation of what happened. It isn't, in any way, shape, or form affecting what happened. So at the end of the day, every time, you see something with Grafana going down, it gets frustrating because you see it on your providers. Well, we first went to upgrading the back-end infrastructure for the Grafana servers because we know that the scanners, we know that the whole telemetrics presentation back to you is going to be critical. Well, we got that implemented and we put that out. Now we're in the process of changing the whole database architecture underneath it, because right now we're pounding on the actual databases to do a lot of this delivery. That's not scalable, either up or out. So what we're doing now is we're disintermediating a lot of that stuff and turning them into API calls and stuff, so that ultimately we can end up banging on the data without actually really putting a lot of pressure on the underlying architecture. That process is going to go on for the next 6 months, and I think we're going to do a great job of that. It's not critical to getting out there and selling data, though. It's just critical in having a really performant architecture that we can feed back in the telemetrics to you guys. I think we've got great personnel there, and I think we've got a great strategy. So, keep an eye on that. By the time we get to the end of the year, I think the telemetrics delivery is going to be second to none on this thing. So that's kind of the status of everything. I know I kind of like drone on and on and on there, but at the end of the day, we really identified all of the different things where were causing data to drop on your providers. We think we've nailed the majority of them down. There may still be a straggler that happened, one or two down the road. We want to hear from you if it does. We'll want your logs. We'll want to upload those logs to take a look at them. But at this point, I'm turning all of my focus now to selling data to customers. And that's a good thing because that's what I do best. This shit that we've been doing for the last 3 years has been a blast. It's been a lot of fun building this thing out. But this thing is built and it's ready to go. And if you don't believe it, all I can say to you is stick around for the next couple of months, next couple of quarters, and you will see it with your own eyes. Anyway, that's our call for this week. We'll turn it over to Q&A here. I don't think I see any hands, so maybe this will be that rare week when nobody asks any questions because we totally answered them all. But we'll give you a couple of seconds here to put your hand up if you do want to ask a question. Flip.
Hey, can you hear me?
Can.
Hello?
Hear us?
Yeah, gotcha. Sorry. I was just curious. I was thinking about the whole data center thing and the relayers and the storage provider and all that, but I was just curious what you see maybe for the future of the storage network in regard to things like, do you ever see customers storing VM storage, like live VM storage on it, or customers that would have, high IOPS for databases and things like that? Do you ever see the network being able to sustain something like that, or be able to have that capability, or is this more always the long-term kind of archive storage, or is this more like data kind of at rest kind of thing that we access every now and then?
If you look at the AWS stack, essentially at the foundation of it is the S3 storage layer. And so getting a performant and very, in our case, a novel architecture, but a very performant, very cost-effective storage architecture built around the planet is always going to be sort of job one right now. So once we, get to a place where we have exabytes or even hundreds of exabytes or even yottabytes worth of, capacity around the globe, we can't really say our job is done in building out standard object-based, storage, which primarily services archival, but also services app development, also services VMs, also services every other kind of, databasing and all that sort of stuff. But that core S3 object-based layer is always sort of like the foundation that the house is built on. But if you look up the stack, there's a whole bunch of stuff that we're going to want to address and we're going to want to do. Now, in crypto, what tends to happen a lot of times is, projects partner up and, some people are saying, well, why don't you partner up with, some other, project that's doing Docker containers in crypto and blah, blah, blah. Yeah, it's possible. I mean, we may do some of that, but we know that we are going to start targeting every one of those layers up the stack as we go forward. So, will there be a XNS EC2 type instance somewhere down the road for us? Yes, absolutely. I don't know when we get to developing that. What I see is this: we have to get to that giant global coverage of S3 storage, around the globe. So somewhere along the line, we're going to need to bring on a fairly significant amount of money for marketing, for brand recognition, for brand building, to kind of get ourselves elevated up to that place where people compare us favorably with first the second tier guys like Wasabi and Backblaze and Dropbox and whoever, and then the top tier guys, the three that we all know the names of. So that's coming. I mean, I'm working on that right now. That whole fundraising thing is what I'm working on. I've got to get a set of audited financials put together, and then I'm going to head to Silicon Valley and I'm going to talk to the real venture capitalists. We're going to bring on the real money, and then at that point, once we have that, we can do the branding and so forth. Then we will also start throwing large numbers of engineering assets, things like EC2 at database block storage at all of the different stuff that's available, because look, there are just a ton of those out there and we can do a great job, and they all contribute to putting storage on you guys' units. Also, perhaps using your guys' units for processing, all of the different kinds of services where you can make money as providers.
I guess I was more or less, maybe I didn't ask my question well enough, and it's my fault. But I guess I was wondering more or less, do you think that at some point that you guys might put out something for us who are standing up relayers? If we're going to be MSPs, you're going to have maybe some conversations or meetings about, hey, this is the literature, or these are the conversations that you can have going towards your customers. Because I mean, for right now, most of my customers for my MSP, they're already using things like Dropbox or OneDrive to do all their stuff. But for the ones that want to do things like app development and stuff, it seems difficult or a hard push to say that the relayer could support things like a virtual machine or a database or anything like that. I just didn't know, if there was going to be literature come out or things like that in order to help us with the relayers to make our customers understand, why this is important. We understand why it's important, but I'm not a good salesman. So I didn't know if that was going to come out.
Well, look, I mean, what you're talking about is part of the call we had today with our partners. I don't think you did necessarily ask it wrong. What I addressed to you right there was the up sort of strategy. I think kind of now you're talking about the out strategy in some ways, but the deal is that you want us to prepare marketing information and materials to explain why you should take S3 out of the equation and plug in XNS instead. And the primary sell tactics are pretty simple. There's environment, there's cost, there's control, there's all kinds of headline sells that go along with our thing, right? And we definitely plan to build out all of that material. Last week or 2 weeks ago, or whenever it was, when I announced that Henry was going to be solely dedicated to that evangelism, he's starting to work up the process on the websites of all of the materials that we're going to be getting out there for MSPs, for customers. We have a huge job there to put out, like case studies, white papers, one pagers, the whole 9 yards. We already have a pretty good chunk of that. We've got the doc site on the website, and now we've also got a bunch of video tutorials that have been built. They're kind of almost ready to go. We've got some additional materials that Henry's going to be onboarding. We're still kind of working on our marketing and sales infrastructure and how that stuff all works. We've got a web developer working with us right now. So you're going to see all that stuff start to slowly come on board. What we want to hear from partners is, what do you need most? And right now, what the partners told me today is they need a one pager that really describes their deal. So I'm going to get that out there, and we'll have that. And part of that sort of process will ask the secondary questions like you're asking, like, so I'm building an app, and my app has, sort of a pancake to it. It's got to have databasing. It's got to have, sort of like an EC2. It's got a Lambda. It's got, some things built into it. Why do I replace the S3 layer with XNS? Because right now that's the only thing we offer is the S3 layer. And the answer is going to be those things. It's going to be the environmental. It's going to be the cost. It's going to be the distributed and control that you maintain over your data. It's going to be the ability to choose the providers for latency. It's going to be the ability to choose providers to provide, a real localized access to where the data is being stored versus with, say, Amazon, where you have to choose a data center that might be 1,500 miles away. We already know what those sell features are, and we need to educate our MSP partners. I do notice that you weren't in the partner meeting today. because you haven't told me exactly what the ability is that you have to bring to the table and what you're looking to do as a partner. And I'd like to get you into that group, but I need you to just go ahead, pump something into that partner application channel that gives me a little bit more feedback about what your potential is, and then I'll add you to the group. It's right now a 1-by-1. We're literally in that war phase where it's crawling up the hill and tackling obstacles 1-by-1. That's how this has to go for the next several weeks until we get enough storage on there that people really start to see the benefit. And as we get the marketing materials built out that you guys can use to sell with. All I can say is I don't have a big budget right now. I don't have a bunch of marketing people on staff. You just have to be patient. We're grinding it out. We'll get that material out there for you. And as we get that material out there for you, more and more of you will come aboard and start selling storage for us. It's just, we're grinding it out. That's all I can say.
Thanks. Answers the question. And by the way, no rush. Just wanted to ask it and get it out in the open and see how your thought was. Thank you.
If you have customers right now, the thing you can do for us, right, is identify one or two who are really good early adopter types. And we can subsidize their storage for some period of time. We can help you out by saying, look, we can make the cost a non-issue, right? We can at least pull that out of the equation and get them onboarded and let them try it. Let them see how it works. Let them see what it takes to manage and continue to run a relayer. Let them play around with provider settings and where they actually locate the storage that they're uploading to the network. Let them see what's all involved in it. Let them tie it to an app that they're developing, or let them tie it to a database or a data lake or something that they've got going on. We just need one or two early adopters from each of our partners to go ahead and really sort of show how this works. And we're willing to remove the cost objection immediately. So come talk to us in the partner channel and we'll help you get somebody onboarded, and we'll help you work through the process of how relayers get provisioned, what's the capacity. We can have one-on-one trainings. We can have one-on-one sales demos. We can have one-on-ones from now until the cows come home in order to get you to onboard one or two customers. But that's where we are right now.
Okay, great. Thank you.
Cool. All right, long call, hour and a half, too long. These need to get cut down, but it's okay. You got a recording, you can go back and re-listen to parts of it. And ultimately, again, the time is now. We're about to get started. The status of the network is strong and we're moving forward. So stick around, help us out. If you know somebody who could use the storage, now's the time to introduce them. If you want to be a partner, now's the time to get in there and tell us that you already have customers ready to go. Look, we know that buying MSPs out of this group is not really our long-term strategy. We think there will be some MSPs that will materialize out of you guys and who will make a lot of money selling storage on our network. I just really truly believe that. I think some of you guys will actually graduate and maybe even make a lot more of your money selling storage than you're making providing storage. But in the long run, the goal is to onboard people like Kaseya. I mean, we want to bring on the major league of MSPs, right? We're not ready yet. We have to learn how to sell the storage. We have to learn how to offer the partner opportunities in a way that makes a lot of sense for those guys. And we're on the path to doing that. That's what we're doing right now. We're working through that process. And when we get to the end of the next 6 months and we look back in hindsight and we've conquered that hill as well, we'll be able to say, see, we keep telling you, we just keep grinding it out one by one. We keep knocking them down, set up the obstacles and we'll knock them down. Anyway, thanks everybody for showing up. We'll see you next week. Recording will be in the channel as always. And thanks a lot for being storage providers.